Good afternoon, ladies and gentlemen. Welcome back to Investment Promotion Week, organized by Invest Hong Kong. We're now at part 2 of our interesting day with startups looking into sustainable futures. May I invite all of you to put your hands together to kickstart this afternoon, please? Wonderful. Thank you so much. I'm Patricia, and it's my honor to be your MC this afternoon. First of all, I would like to give a few reminders to our participants in case you just tuned in or you just joined in this afternoon. Our sessions will be conducted in English with simultaneous interpretation services provided. If you do need a headset, you may borrow one at the counter from the entrance. For our online audience, please be reminded that the videos and the microphones will be muted at all times. If you wish to ask questions, you can make good use of the Q&A function. And if the answers were not provided to your questions, they will be replied individually via email later. The first panel of this afternoon is Investing into Real Greentech, and we're very honored to have our moderator, Mr. Jordan Kostelak, Asia Pacific Director of PropTech JLL. Mr. Kostelak and our 4 expert panelists will share their insights on with so much capital being invested into sustainability and climate technologies, how do investors ensure that their capital and investment is going towards technologies, companies, and innovations that are making a real impact, are not just greenwashing. Let's first of all welcome Jordan and his panelists on stage. Please welcome.
Okay, since we're wearing masks, we're going to sit by our picture so you know who is who. So I don't want to spend a lot of time on introductions because we've got a lot that we want to talk about, but just very quickly, I said I wasn't going to do it this way, but I'm just going to ask the panelists to introduce themselves with like 2 sentences. You got the job titles up there, so why are you here to talk about this subject today? So Alex, 2 sentences.
So Undivided Ventures invests in sustainability innovations and technologies which solve for sustainability challenges in the built environment. So looking forward to having a discussion, Jordan.
Thank you. Kevin.
So Kevin from, actually not many people know SoCam, but we're part of the Shuiyuan group. Shuiyuan is a developer in mainland China, mostly known for our development in Xintiandi and Shanghai. In Hong Kong, we're actually a general contractor. The reason why we're here is for 2 reasons. One is we actually want to innovate in our core business and to apply prop tech and construction tech to drive sustainability in our core business. That's number one. The second reason is as an organization, we're actually also trying to build out our corporate venture capital function. And we believe by investing in some of these startups, it's actually the best way to get engaged.
Hi, I'm Ellie. I'm part of the global sustainable investing team at the asset manager Fidelity International. I'm here because my former career was actually in corporate sustainability for a major developer, real estate developer headquartered in Hong Kong, and I'm personally very passionate about all things innovative and viable solutions related to the built environment, and looking forward to learning from all of our panelists.
Hi, I'm Mevish, and I lead Impact globally at Rosewood Hotel Group, which is a luxury hospitality and lifestyle group that is headquartered in Hong Kong. And what we are endeavoring to do is really look at the ways in which we impact all our stakeholders, all the people that we interact with, as well as the planet, and then to build out positive impact in the way that we are doing business, not as something that sits outside of it. So I'm here today because we want to bring our whole selves to this movement and this transformation. The group itself, our Capital Ventures arm, Rosewood Foundation, everyone that we work with, everyone that we partner with.
All right. So Mevish, we're going to start with you because I want to kind of define terms. I think everyone has assumptions about what it means, what sustainability means, what green tech is, all of these things. But one of the things I see conflated all the time is impact investing and sustainable investing. So are we just creating terms to manufacture complexity? Do you think these are one and the same, or how would you differentiate them if you do?
I don't think we're creating terms to manufacture complexity. I think we are struggling to find terms that reflect complexity. Because this is, the great thing is that all action actually starts with words. So the silver lining on having all these terms is that they exist. There is an awareness around we need to be sustainable, we need to be responsible, we need to be net positive for the world, not just taking from it, but actually giving back more to it. So I'll just, kind of challenge on that it's a good thing that we have all these terms. What's not great is all the confusion around it. Impact investment, sustainable investment, ESG investment, they get confused and conflated. Part of the reason is that the sands are still shifting. We don't have very clear boundaries between all of them, but I will attempt to set some of those boundaries based on my observations. If you were to think about all the ways in which private capital is flowing into other organizations, there's a spectrum of investment. On one end of that spectrum is just commercial investment, what we understand, what venture capital funds are doing and family offices are doing, great. On the other end of the spectrum is private capital flowing to meet social or environmental needs without any financial return expectations. That's philanthropy. So if there's philanthropy on one end, and there's regular commercial investment on the other end, all these other types of investment are basically sitting on that spectrum. In the middle, I would say, is impact investment, which is investing into companies that are generating a positive social or environmental return along with a financial return. But there are two things that the investor is doing when they're impact investing. One is they are purposefully seeking this spectrum of returns, so not just financial, but also social or environmental. The other is that they're trying to measure those returns. So it's not just a fuzzy, hey, we're doing this, if we invest into this farm, then, we'll be generating some livelihoods for farmers. No, it's like we're investing into this farm because it's a regenerative soil farming system, and it will create a financial return for us, but it will also be regenerating the earth that we depend on for our survival. Between impact investment and commercial investment is a big gray area where sustainable investing, ESG investing, all of that falls in. And that can be as minimal as negative screening. We're not going to invest in tobacco or guns, to more purposeful, that we want to seek also some positive returns alongside that, but it's not as focused and determined as impact investing would be. So I hope that gives a bit of clarity around this space.
It does. I think your point about confusion, though, this is a personal one for me, right? For me, it's like I am a bit confused on those terms because, and I think I'm very wired for skepticism. So it feels like just put a nice blanket over it, and let's feel like, as you said, you feel good. But I think the thing that stands out to me about what you said is on impact is measurable. So that I think helps equip us a little better to move on in the conversation. But you mentioned philanthropy, and Ellie, I think we've talked about this before, but philanthropy, there's the argument that there's no such thing as altruism, that even philanthropy has tax write-downs and a lot of advantages in a capitalist system. So in those distinctions, Ellie, you touch Asia and the European investment markets. How is that, from a regulatory standpoint, how is that defined or separated in those terms?
I'm really glad you brought up regulation, because it's literally the talk of the town in the finance sector, and I have to give a lot of props to Mavesh for defining so many complex concepts in just a minute or so. So I guess just going back to the higher level, right? Whether you're looking at philanthropy or investment, simply put in layman language, is essentially putting money in good cause to enable good outcomes. But in terms of financial regulation, as investors of different types are taking more of an interest in sustainable investing, ESG investing, what have you, to do good thing while you're bringing in return, we also have to fulfill our fiduciary duties. Where, say, for my company, my organization, we're an asset manager, so we don't just invest with our own money, we manage other people's money and help them invest. And as the financial community comes together to do this, there has to be some sort of framework and common ground to make sure we can account for the so-called good impact, whether they are generally sustainable or specific to environmental or social outcomes. So going back to sort of the spectrum of how you define different types of investment, I think Mavesh touched on that earlier, right? The former life of what we call sustainable investing now was sort of like the socially responsible investment, where investors would exclude the bad industry, the sin stocks per se. And sustainable investing is like somewhere in between. And this is sort of a slightly different metric, but we're talking about similar concepts. And in Europe, where most of the whether you're talking about corporate sustainability reporting or for investors, fund regulation would come from. As a practitioner, I can tell you what we see in Europe in terms of regulatory framework. In a few years, we'll see it in Asia. And more recently, in the European Union, there's a piece of legislation called the Sustainable Finance Disclosure Regulation, which essentially helps investor classify different funds to their degree of investment into different causes. And how they look at impact investment is rather specific. So if you're at all interested in sustainability, you may have heard of the United Nations 17 Sustainable Development Goals. Some of them have sub-targets and indicators that are investable. And in EU's definition, for investors that are putting money in the investable SDGs, that could be defined as impact investment. So it's becoming a little more clear to the entire world how investors would look at it. And of course, coming with this framework, there would be preferred disclosure metrics. And at the same time, of course, back to the corporates, which are driving real world outcomes, actually allowing investors to enable their activities. They're also facing a harmonization of different types of reporting frameworks. So it's definitely a good time to be having this discussion, I think.
Well, I want to quickly grab on one thing you just said, because you said the regulation in the EU is is kind of the leading indicator for what the Asian investors might be looking at. So is it pretty sound advice that anything they might be investing in the impact world right now, by the time the regulation catches up, their investment probably hasn't matured, so they should just front run it with like the parameters of these EU regulations? Would you advise people on that, generally speaking?
I think so. It's definitely good to think about impact as you're shaping your investment strategy in general. I would just add one more point. On top of the European Union regulation, actually different regulators in major financial markets, including Hong Kong, are rolling out guidance for forming these ESG funds, right? In slightly different shape or form. But say, for example, if you're launching an ESG fund in Hong Kong, in the listing process, you would have to articulate the strategy and your theme and your integration method, right? Like how it is sustainable, essentially. So the world is definitely converging in terms of sustainable finance regulation.
So generally speaking, we're moving away from these commitments and sort of backpatting into actual sort of on paper definitions of these things.
Can I make just a small point?
Very quick, because these guys have
I
been
know,
real quiet.
just on ESG investment, because that is a bit of a different ball game altogether. Because the way ESG indices measure a company's ESG credentials are about how well the company is equipped to deal with risk arising from ESG, not about how that company is contributing to environmental, social, or governance. So it's a really, in my opinion, a really low bar when you're looking at impact to be starting with ESG investment.
I totally agree. I mean, I think that in many ways, ESG builds a ceiling for what is possible in investment. Because when you're, for example, in my world, in the built environment, there's a reporting mechanism called GRESB, and GRESB requires you to report basically on 3 different areas. And if you feel like you've done what's needed to reach a certain points in your own corporate sort of policy around GRESB, then you're not going to do any more, right? You're not going to activate any more strategies. So I think sometimes ESG has the ability to not do what I hope it was set out to do, which is to try and provide guidance to corporations and incentivize them to do more. It's actually bringing that bar down a little bit, and I think that that's sort of disappointing when it comes to ESG.
So, and on that, because we are talking at Invest Hong Kong, right? So let's zoom in on Hong Kong a little bit. You and I have had a lot of conversations because we both work in a very similar, sort of concurrent parts of the real estate world. Hong Kong, our industry is regarded as a laggard, right? We're slow to adopt technology, and then Hong Kong gets like almost an extra level, like extra badge of being a dinosaur. Has that been your experience as you were trying to innovate in this space, or is that just reductive generalization?
So I've really enjoyed our conversations, by the way. They've been really uplifting.
And private.
Yeah. So I think it's very easy to criticize Hong Kong. It's been very easy to criticize Hong Kong in the last 2.5 years. I think that I would never call Hong Kong a dinosaur. I mean, you look at the infrastructure we've built in Hong Kong. You look at the way that we do business here, the financial industry, the efficiency by which we get things done. I don't think Hong Kong has ever been a dinosaur. I do think that there are certain areas that Hong Kong could certainly improve on. We're talking about sustainability today, so let's focus on that. I think that there needs to be more incentive for the private sector to start doing more when it comes to impact, to execute more innovations and technologies to decarbonize, for example, or to focus more on biodiversity, for example. We don't really have that framework today, at least not in the built environment. A lot of it's very much guidance, but not requirement. And also it's very much, there's no stick and there's no carrot, right? So I think, as a business owner, you want to build something that's accretive to your bottom line. So you need to adopt technologies, not because it's nice to have, but you're running a business, and especially when you're a listed company, you have a fiduciary responsibility to your shareholders. So there has to be a reason to do it. And I think that's super important. I also think Hong Kong has a huge opportunity that it's not taking advantage of. I think that it's geographically sitting between, obviously, China and the West, and to Ellie's point earlier about these convergence of, different sustainability and ESG protocols, Hong Kong could really be an incredible instrument, an instigator in bridging that gap. And I think that when countries and cities start competing on, for lack of a better word, green, Hong Kong could really be a leader in that space. So, I mean, I hope that we will move towards that, and in that sense, have a lot of hope for Hong Kong.
Well, Kevin, you're probably the one putting that most to action, right? You've set up sort of an innovation and investment hub around more sustainable construction technologies and practices. So literally approaching this from the ground up, right? So tell us a little bit about where that vision formed from, right? Because it is action. It's not, time's up, sorry. No, so like how, putting it to action, right? Like this is, like I said, we know 40% I think of the world's embodied carbon rest in real estate, right? So the first place to start is with figuring out, should it be a new build, right? And then making sure it's sort of optimized as a new build, because there's no better place to get it right. So what are some of the things that you're doing with SOCAM to tackle that?
Yeah, I think obviously from a management and strategic level, we're very keen to commit to SBTI, but we don't want to commit lightly, because we know that this requires a lot of execution at the working level. It requires engagement from different parties, especially when you talk about not just scope 1 and scope 2, but scope 3, right? So, but what we're doing at the moment is we're focused on two things. One is digitalization throughout our organization, because we believe that in the absence of digitalization, we can't have true and accurate data, and also real-time data. The last thing we want is our colleagues kind of jammed in a room, filling in ESG reporting forms at the end of every quarter, or at the end of every year. That's not what we want, and that obviously doesn't create value. So that's why digitalization is very important. It does take time, and it does take a lot of engagement. One example I'll give is in the design and the construction. In Hong Kong, we actually work on a lot of the construction projects for Hong Kong government. We build a lot of buildings for the Hong Kong government, including public housing, but also government offices. So actually, a few years ago, I believe it was 2018, the government mandated the use of BIM for the design and construction. And we've obviously, as one of the contractors, we've adopted that. But even for BIM, there's different levels, right? I believe we're only at level 1 and 2, because BIM obviously is a 3D model, kind of to replace CAD. Then there's a 4D dimension, which adds in the time element, because things evolve over time. And then there's 5D, which involves cost as well. I believe, at least for our company, we're still at 4.5D at the moment. We're still not quite there in terms of 5D. There's also 6D, which includes what about post construction, the operational part of a building, the facility management, the use of this whole nice digital twin to manage your whole building. We're not quite there yet, but we've at least started on the entire BIM journey. So the first thing is digitalization. The second thing that we're doing is we're focused on the low-hanging fruits, because that's the easiest, obviously. For driving sustainability initiatives, oftentimes it requires engagement from the working level. And if these initiatives are too disruptive to our existing SOPs, then oftentimes there's a lot of pushback. And therefore, the ease of adoption is very important when we choose these technologies. One example I'll give is we've adopted an energy storage solution. This is a startup in Hong Kong. We've adopted this solution in our construction sites to replace diesel generators to power cranes. We actually found it to be very impactful, very useful, and also commercially viable. And therefore, actually, after about a year, there was a fundraising round, and we decided to invest alongside this company as well and be a shareholder.
This is Amped Energy, right?
That's correct.
We can shamelessly plug. It's all right. We're doing good.
No problem.
Here.
Yeah, exactly.
But I just want to summarize one part that you said there is, it sounds like your approach at the moment is the idea of if it can be measured, it can be managed. So this whole data acquisition strategy you have right now is about being able to measure it and then sort of operationalize how you contain and reduce the impact. Is that like a fair characterization?
I think so. I think measuring is important because it sets the baseline. Without setting the baseline, then it's hard to set the pathway to net zero. I think that's why measuring is the first and foremost in terms of the net zero pathway for us.
I think measuring is also important when you're investing in a portfolio company, for example, that's looking at solving for a sustainability solution. Because especially if it's hardware, right? I mean, if there's a hardware solution to a sustainability problem, that hardware has to be manufactured. And so, what is the carbon intensity of that manufacturing process? And so a lot of this is mathematics, and I think measuring is really something that needs to go into the execution, but also needs to go into when you're thinking about investments, whether that actually makes sense.
So, and I think that brings it brings up that question of, are we solving sort of consumption side problems and then just deflecting them to the production side, right? And I think this has become a really important question in the longer supply chain. We've used a lot of time kind of getting into really deep dives into some of these issues, so I want to speed up just a little bit here. There's a term that gets thrown out a lot, so this is greenwashing, right? And it feels a lot like it's just like almost like a schoolyard fighting thing at this point when I hear like all these companies, they're greenwashing, they're greenwashing, they're greenwashing. Someone want to like, just any of you want to pick up and how do you define greenwashing? What does greenwashing look like to you? I mean, we have this sort of simple idea of it's sort of a disingenuous application of sustainable or, basically doing good under the guise of this, right? But does anyone have like a way that they define it, or what sets up alarms in your head when somebody's pitching a startup or a solution to you, and you're like, they're calling it a sustainable solution, you're like, just kind of put a label on there.
Maybe I can go first on that. Greenwashing is, I think the easiest way to recognize it would be if there's a lot of jargon that is not easy to understand. I think jargon is the refuge of anyone who's trying to say one thing but doing another. And there is a lot of jargon that this space makes available to people to, and companies to be able to do that. But that's about recognizing what actually is greenwashing. I think, where is the world today? We are facing existential threats. Thanks to climate change, inequality, huge big problems. It's not something that's happening to us, it is something that we have helped bring ourselves to. If there are ideas, plans proposed that are about repackaging existing actions into this new jargon, to me that is greenwashing. If nothing on the ground is actually changing, if you're not doing business differently, if you're not trying out new things, innovating, having authentic, honest conversations, then just slapping on a fabric of terminology and jargon and putting out ESG reports without actually changing anything on the ground, that's greenwashing, impact washing, whatever washing you want to call it, it's a wash.
And I totally agree. I think that also greenwashing is no longer schoolyard. Greenwashing is getting real. Offices are now rated over greenwashing around the world. I won't mention the companies, but it's happening. And I think that, it's a real issue because it's also sometimes hard with greenwashing because some people can have, so when we look at greenwashing as sort of a net negative, like, so if you're looking at a business to invest in and there's no real positive action to certain thematics which we invest in, then, for us, that's sort of greenwashing, right? But at the same time, some of these people come with the best of intentions. Some of these founders have the best of intentions. They just don't know how to package it or don't know how to actually measure it. And so I think it's very easy to say someone's greenwashing, but at the end of the day, I think some of the people who may be greenwashing, don't actually intend to do that.
Yeah, I wouldn't think it comes from a place of malice, but again, you get caught up in
Well, it
wanting
does sometimes.
to do good.
Yeah.
Yeah, sometimes. But I guess Mavesh, you gave us some really good sort of signals of like jargon. Yeah, if you're sort of packaging it up in lots and lots of jargon, if you can't explain it to a 5-year-old, it's probably not all that viable, right? What are some of the signals that help you ease your mind that this is not a greenwashing effort? Is there anything that is, especially you're evaluating early solutions, early green tech, where it's not proven, but are there any indicators that investors could look for that says, I think there's some real legs to this besides, just numbers on a sheet?
For me, it's quite simple. It's about experience. So a lot of people, I think out of all of us, probably Ellie and Mavesh would relate to this the most, but there have been a lot of people talking about sustainability for a long time, and they've been in the shadows, right? And suddenly, like, everyone's running out and wanting to talk to them, and and suddenly they're listening to them, which is interesting. But I think it's experience. I think it comes down to people who have seen sort of the hype around sustainability, but also, taken a lot of time to really understand what it means, because it is such a complicated issue. There's an interesting diagram around a web of what sustainability means, and it's the most complicated diagram I've ever seen, because sustainability affects and is it affects everything, right? It really does. So I think if someone comes to me as a founder and it's very obvious that they're just in the last 3 months decided that this is a market potential and then jumping on that bandwagon, beyond measurements and data and all that stuff, that would be a alarm bell to me.
There's a lot of talk of like, you know, whether it's the regulation that Ellie touched on earlier, but Ellie, I think you're probably the best person to answer this question. There's a lot of talk about sort of externalities that come in and are driving decision making, specifically where to deploy capital. So you know, Fidelity's asset managers, is that, you know, are you seeing genuine pressure to like, yes, we want this in here, we want to see a carve out of this percentage, or is it more like, yeah, you can throw some in there because that looks great for us, right? Or makes us sort of feel some peace of mind that we're part of the solution, not the problem.
Well, it's always good to think about why we're doing something before I actually take action. And what I'm going to say is actually quite relevant to what Alex has touched on. And I would add that apart from you know, using your experience as an investor to, you know, differentiate between greenwashing and non-greenwashing, the time factor is also really important, right? So an asset manager like Fidelity, we're a long-term investor. The good thing is, to date, we're still private. So unlike some other asset managers, we don't have you know, LPs behind us pressuring us to do one thing or another. And we choose to do the right thing. And that, in practice, means we have a longer runway to look into longer-term investments. And I would also argue that, you know, whether you're in corporate sustainability, sustainable investing, impact, what have you, we're in transition. This is what we want the future world to look like. The future of investing should be sustainable investing. It's just that we're trying to grapple with using the right labels, the right frameworks to think about what the future should look like, right? And in this process, I think many of us struggle and find this confusing is because it's not just a matter of inputting data. And I mentioned the time factor because as we look at different portfolio companies, we usually follow them for years and years, right? So before the ESG team comes into the picture, our equity analysts would, you know, look at the financials, talk to the board, understand the management team to see whether they are in the right position, have the right expertise to run the company effectively. What ESG is and impact, the negative being, you know, ESG risk, the positive being the impact investments, is an overlay to understand more broadly how this company is positioned to be successful and sustainable in the long run and to generate good financial returns and good outcomes. So I think that's kind of, you know, the way I would look at it.
But it is a little hardened. It's reinforced in terms more than just sort of hand-waving and feel-good exercises.
I mean, for sure. I mean, again, without being boring, but going back to the regulation, apart from reporting the numbers, there's also non-financial reporting standard, right? So increasingly, clients are demanding us as asset managers to show them how we integrate ESG, how we engage the companies that we're investing in on their behalf to show the qualitative as well as the quantitative outputs.
And if I can add to that, there's regulations that are coming into the you know, financial services industry and the investment industry. But then there are also regulations that are coming into companies that are manufacturing, selling goods and services for people to consume. For example, I don't know if you guys have heard, a couple of months ago, H&M was forced to withdraw some of the labeling that they were putting on their clothes as the cotton being sustainable. Because a regulatory body came down on them and said, you actually cannot prove this. Unless you can prove it, you have to remove it. Okay. So that's something for the investment community to keep an eye on as well. It's not just about financial reporting. It's about regulations that are coming around responsible operations. I mean, most carbon emissions that the world emits are still sitting in the manufacturing sector. You know, which goes into producing all the goods that we're consuming. So there are regulations around the corner in that. And I want to pick up also on the private company point. I think this is really where Asia has an opportunity to leapfrog. Most wealth in Asia still sits in private companies. A lot of this is the fastest growing wealthy region of the world, and most of that wealth is being generated not through multinational corporations or publicly listed companies. It's private companies. The con, one could say, of private companies is they don't have to be that that transparent. The pro is they don't have the quarterly pressure. They don't have the pressure that Apple faces to sell you a new iPhone every single year. So they can actually do things differently. And at Rosewood Group, that's something we recognize because we're also a private company. And we see that as an opportunity to do the right thing boldly.
I think it's a very fair point. I think we've had some really good deep dives here. I want to give Kevin one more chance, and then we're going to try and have a little bit of fun with the last bit of it. So, Kevin, you get one more boring answer, all right? I'm joking, of course. Sorry. With Soyeon, we just had our the very first chief executive's address yesterday, right? And as you're being the one that I've singled out as the one delivering on the ground here, if you could have put one piece of policy note into that brief yesterday to help spring this whole effort of impact forward, what would you have added to Chief Executive Lee's speech yesterday?
That's a tricky one, but I'll try. I think the government has a big role to play in this, obviously, and in Hong Kong, the government is actually our biggest landlord, right? We have roughly 80,000 public housing units serving over 2 million in terms of population. That's roughly a third of Hong Kong's population, right? And that we also have hundreds and thousands of government buildings. So I think the government can lead by example. That's one. And by that I mean, for example, in future new builds, there could be certain requirements, certain specifications mentioned in the tender documents when they seek contractors or private companies to build out these buildings. That's one. And the second point, if I may add one more point, is just going back to Alex's comment earlier, the carrot and stick. I think that's important. Obviously, the private sector works on commercial principles, and oftentimes, even for ourselves, when we look at adopting new technology, we need to actually calculate payback, whether that makes sense commercially. And oftentimes, if there is an incentive given by the government or by another organization, that obviously helps. And the other is obviously the stick, right? Certain regulations can speed up things, because obviously if we want the whole industry to move forward on a voluntary basis, that may take time. People walk on at a different pace. But if there's regulation setting the standard for the whole industry, then we can bring everyone along the journey.
All right, so I want to get a little personal, but not too bad, right? Because we talk about greenwashing, it's always easy to accuse an organization of greenwashing because it kind of like doesn't put responsibility on anybody but a logo, right? All of you are positioned as experts and advocates for sustainability, but what do you do as an individual? What's a habit you've picked up, especially in the last year, as sort of your individual contribution to be a little more sustainable to help tackle this? Even though you're just one person, what do you feel you're doing that's making the most impact that maybe some of us could steal from you? Anybody can jump in.
Well, I think all of us in the last 2.5 years have been pretty low carbon. None
You've
of
given
us-
up travel
Yeah,
for the last couple of years?
Yeah, that was my intention.
Yeah.
No, listen. I mean, I think that food is one thing, and when you do read, I'm actually not a sustainability expert. I mean, my team is, and they've really opened my eyes to a lot of the issues. But when you look at a lot of the data around food, it really does make you want to eat in a different kind of way. So that's something that my wife and my family are adopting right now, and I think that's a kind of an easy thing to.
Well, Mevesh, that actually good. I'll direct a question right at you along those lines, because one of the panelists earlier was talking about like the F&B or the hospitality sector has a big role to play in helping the adoption of new proteins, right? So I'll let you kind of shamelessly plug, but is there a favorite dish that you have at one of the Rosewood destinations that is using sort of new types of food?
Actually, one of my favorite restaurants at Rosewood is Asaya Kitchen. which the whole philosophy of Asaya Kitchen is around local, mostly local, seasonal, healthy produce, and cooking it in ways that is preserving the nutrients of of those dishes and those foods. So I can't pick a favorite dish over there. There are many, but I would urge you all to go and enjoy that. And what I love about that philosophy is that it touches so many aspects of a different way of doing business that we need. So, it's about the carbon footprint of not flying in every ingredient that you need for cooking. It's about actually encouraging local farming. Hong Kong actually has, I think we have about 7,000 square meters of farmland, and if we convert our rooftops into urban farms, that gets us another 6,000 square meters. So there's a lot of potential here for investing into local farming that goes unutilized. So that's another one. A third one is, livelihoods, because let's not forget, anything to do with environmental sustainability involves people. It cannot be separated from people, and that means patronizing businesses that are putting their sweat and effort into these alternatives. It also means a responsibility to take the consumer along on that journey. So we haven't experimented with, say, alternative meats in a systematic way, but we have spoken to companies like Celex in mainland China that are leading. I think they're the biggest company that is working on cultured meat in China. So then the responsibility on us to work with them and see, how can we introduce this concept into the business. And at a personal level, we tend to think that, oh, this is something businesses should do and governments should do. Absolutely, they need to. But there's a lot more within our reach as individuals than we tend to think. Whether it is making the choice to take public transport into work every day, although you could Uber it in, that's a lower carbon option. It's about where are you choosing to buy your vegetables from? Will you refuse to buy from certain supermarkets that I shall not name because every single raspberry is coming packed in plastic? It's about are we patronizing the small and local businesses in our neighborhoods rather than going to the most convenient big store? And keeping this neighborhood spirit alive. So there are so many things. Are we recycling, even though we have tiny apartments with no space? Are we still separating that waste and then depositing it into one of those new recycling hubs that the government has set up? So all of this is within reach as individuals and as organizations.
Well, I hope everyone's got a little more insight today, a little sharper way of evaluating these types of investments, because we realize it's been very well laid out for us today, just how important it is. So I just want to say thank you to the panelists and to everyone else out there. Please keep all these great tips in mind, and let's all just do our little part because it adds up very quickly. So thank you.
Thanks, Jordan.
Thank you.
Thank you so much. Thank you so much once again to our panel, and also to Jordan for moderating for us. Thank you. Please be seated. That's wonderful.